Hello traders. If you're a struggling trader and you need basically help with technical analysis, I'll be breaking down a EURJPY trade I've taken a loss in, but I'm still convicted with the buy bias. And we'll be doing a breakdown as to why I'm getting into the trade, what I'm waiting for to get into the trade, and where I expect to take TP. Basically, I'll be starting my analysis from the monthly time frame. Let's go to the monthly time frame. So now we're right here on the monthly time frame. On the monthly time frame, if you look clearly, you can see a higher low, a higher high, and another higher low that looks like it's about to start trickling to the top. Let's take this away. So mainly the monthly time frame is bullish. Now let's go to the weekly time frame. Now the weekly time frame, do this. Now the weekly time frame, let's do our analysis. Let's say this was a lower high, a lower low, a high, a higher low, a high. Once it broke past this last higher low on the weekly became bearish. Now this became a lower high, this became a lower low, lower high, I guess low, lower high, a lower low. Now for me, on the weekly time frame, this is when it shifted to bullish on the weekly time frame. So from this point here, it pulled back here, it made a lower low, and then we had a shift. So once it broke past this level right here, the weekly time frame became bullish because this became a higher low and this became a higher high somewhat. Then we had another higher low, I'll say higher. So basically what I'm expecting now is for this weekly time frame to come down here and create a week, but ultimately by the end of the week end up here. That sounds like a play on words. So let me say that again. So what I'm expecting is for the weekly candle to come down here and create a candle week, and I expect that by the end of the month no, not by the end of the month, by the end of the week, EURJPY should have pushed up to this area of interest. I'll explain why. I have that analysis in a moment. Now we're just looking at every time frame, seeing whether it's bullish or bearish. So now on the weekly we see we're bullish. On the daily time frame, we're currently bullish. So on the daily time frame we have a higher low, a higher high, higher low, high, higher low. Once this broke past this last higher low, this became a lower low, this became a lower high. So lower high, lower low, lower high, low, high, low, higher high. So once we had this candle break above this last lower high, this became a higher high, this became a higher low. So what I'm expecting is for the market to maybe pull back down here, but not break past this last daily higher low. If it breaks past the last daily higher low, the buy bias is invalid, meaning we have to start looking for sells. So what I'm anticipating, what I'm expecting, I'll phrase that more anticipating than expecting, because I'm anticipating the market to do something so I can react to it. So now if this is the last higher low, and this is a higher high, I'm expecting another higher low to be created, but not break past this last higher low, and a continuation of a push to the upside. Let me do this. Let me take this away. Now, on the monthly time frame, let's go back to the monthly time frame so it can be clear to people. If we have this as a higher low and this as a higher high, if this right here is the potential next high or low, it means what we should be expecting is a higher high. You know, higher low, higher high, higher low, higher high. You know, we should be expecting the market to create a high above this last high. You know, for this to become a higher low, this needs to create a high. But even just writing any trade idea that I take right now, taking it to this area of interest right here, I'll say is the most logical for a setup like this, and also most sensible for a setup like this, because you don't want to be playing above the areas of interest. You should want to take your trades at the areas of interest or just before it gets to the areas of interest, because there's a reason why it's called the area of interest. It's an area of interest, so meaning when the market gets there, it's way more likely to react than it is not to, you know. So this is why I have my TP around here, because if this was a higher low, higher high, another high, I'm expecting the next higher high above here. So this is a safe TP to take it. Now let's go down to the 4 hour. Obviously on the 4 hour right now we have this. So the higher low, the higher high. This last higher low has been broken. So now we have a lower high and a lower low on the 4 hour, which isn't bad. So now the 4 hour is bearish, while the daily and the monthly, the weekly and the daily are all bullish. The 4 hour is bearish right now, but all that means is all I'm waiting for is for the 4 hour to go bullish. If I'm still looking for the buys, which I am, I'm still very convicted about the buys. So before, let me do this. Let me take this away. Let me do this. So this is a higher low, a higher high, and now we have this lower high and lower low created. All I'm waiting for to happen is for the 4 hour to shift back to bullish and a continuation to the upside. So once the market shifts to bullish, this is where I plan on entering the trade. I'll just be waiting for a pullback on the 4 hour after the shift of structure, a pullback and entry and a continuation to the upside. So right now we have the daily, we have the monthly. Okay, you know what, I have this over here. Right now we currently have everything bullish but the 4 hour, which is bearish right now. Yeah, so the 4 hour is bearish right now. Once the 4 hour shifts from bearish to bullish, then the trade setup for the buys to the top should be creating out pretty well. So basically all I'm waiting for right now is for the 4 hour to go bullish. Once the 4 hour goes bullish, I'll have the monthly, the weekly, the daily and the 4 hour in sync. So if I'm risking a certain amount behind a move that has the monthly, weekly, daily and 4 hour in sync, go with the trend, you know. I'll be at peace if I'm in a position like that. I have nothing to worry about. Even if I lose a position like that, I'm fine with it, because every probability in my edge will point towards that being a winner over being a loser. So it just means in a series of 6 to 10 trades, even if I don't win more trades than I do lose, my risk to reward will make up for that. And if I do win more trades than I do lose, my risk to reward will be smiling at that. You know, so either way, you still come out in front when you have a good edge in the market. So that's the breakdown for EURJPY. I hope it makes sense to anyone watching right now. If you have any questions, put them in the DMs, put them in the comment section. Ask me what you want. I'll answer any questions that you have.